What's up, everybody? This is Greg with Avenge One Brokers, and this is the ADV1 podcast. This is the podcast that comes to you each and every weekday, and we bring you relevant training, relevant discussions. And today we have a fantastic training. Some would call it groundbreaking. And I have the honor and pleasure of welcoming Mr. Zach Allen. Zach, how you doing?
Doing pretty good, man. Thanks for having me on. How are you?
You're welcome, man. I'm doing very well. Doing very well. Thank you. So to preface this, I've been doing mortgage protection over Zoom and FaceTime for, almost for a year and a half, over a year and a half now. And failed a lot, learned a lot, tried a lot of things. So what we're going to do is we're talking about our mortgage protection Zoom training, what we do. We're going to actually dig in deep. We're actually going to train you on the process. You know what I'm saying? We're not going to just show you some slides and call it a day. So, Zach, Zach here has been doing more instruction on Zoom and FaceTime and remote sales for a bit now too. And I actually trained Zach on it. So, Zach, what's been your success with it, and what's been your experience?
It's worked out well for me. I do know that you need to get the repetitions down. If you do it a little bit here and there, you don't get the repetitions, but the more appointments you have, the more you get into the routine, and it helps you. I've had several months well above 20. I've had months at 40, and that's while sitting at home and going out to lunch with my wife and handling 4 kids and not really working all that hard.
Yeah. And that's the beauty of it. You can sit there in between appointments, you can play with the kids and take care of the wife and not drive out 2 hours to get no-showed.
Yep, exactly.
Which is nice.
If one no shows you, I'm back out in the house doing what I need to do and come back in here for the next one.
So part of doing this is I've tested a lot of theories and had a lot of different ways that I tried it out. And I through trying all those different methods, I kind of honed it into a specific presentation and script that I have that both Zach and I use. And to start, what I used to do is, I have the appointment set. I always, for keynote, we'll go over how to set the appointments. Zach will talk about his mortgage protection script. I'll talk about mine, but it's also the small things like, when I set my appointments, I only set them 24 hours out. I don't set them more than 24 hours out because the likeliness of them forgetting about it and not showing or not answering the call. So when I first started, I had a PowerPoint slideshow that I turned to a PDF that had a picture of me and my family and, talked about everything that I did and what mortgage protection was and showed the carriers and all that. And I gave that script or that PDF also to Zach, and Zach used it as well. What did you see? What did you feel, about that specific presentation opening up that way?
It was lengthy, and you get the clients are there for a reason. It didn't work out in my favor in that aspect.
Yeah.
Keep it short and sweet is kind of where I've honed in for me.
Yeah. And me too. What I found is that when I started off that way, it would take, I'd say, about 5 minutes to kind of introduce myself and go through that and talk through everything and what we're going to do. And it made it a little bit too lengthy on the intro. And I felt as if that turned it to a sales presentation, and they felt it was salesy. Like I'm just setting them up to get sold. And the way that we have to look at this at the base level. Okay. These are people that filled out a piece of mail. Okay. These are warm leads. Okay. They filled out a piece of mail. They sent it in. You get that piece of mail. And now you're setting an appointment with them, and then you're starting off and you're going through this whole big presentation. It's almost like taking them from a very warm client and you're starting them off as a cold client and trying to explain everything. They're already on the video chat with you. They're already ready. They're already ready to go.
Yeah, something told them they needed it. So
Yeah, exactly. So I got rid of that. I don't do it anymore. And I haven't been doing it for, man, it's been probably about 6 months.
you didn't do it on your big month, right?
No, I did not. No, I stopped doing it way before then. I stopped doing it probably about October of 2020 was when I stopped doing it. And I did it was kind of on happenstance. And because I was doing a remote appointment off my laptop, and I couldn't, and I used to share my screen,
Right.
on Zoom and show them this stuff. But then I would have FaceTime appointments and I would try to talk them through it. And it just didn't work very well, because I do FaceTime and Google Duo also. And so, and I, to be honest, I actually prefer FaceTime because then I can call them.
Yep.
If for Zoom, you have to wait for them to come in, and while you're waiting, they may not come, they may not show, they may forget. And if they didn't show after 5 minutes, I'll give them a call right away and say, hey, are you, hey, this is Greg. I'm calling about the mortgage extra appointment that we have scheduled. Do you need help getting into the Zoom appointment? And if they answered, I could talk them through it, or they just didn't answer and I didn't do the appointment. I'll move on to next. But on Zoom, there's especially if you're on a Mac, you have to have your permissions set to share your screen. And I didn't have the permission set at this time. And so I was just like, you know what? I'm just going to talk it through. And so I didn't feel like talking it through because I was kind of in a rush. So I just like really briefly was just like, hey, look, this is what we're going to do. All right. And they're just like, all right. And got the sale. And then I tried it again, got the sale, tried it again, got the sale. And I was like, I think I'm on to something. And I took my intro from 5 minutes long to like 60 seconds long.
Yep.
And so if ever you've watched my content before, this is how I developed the Greg Birch method. This is literally how I developed it and came up with it, was through doing remote sales, because you have to be on point in terms of what you're saying to convey to the client what you're going to be doing, and be assumptive without being assertive. And that's really key. And so I don't do that anymore. So basically what I do is, I schedule my appointments. And then when I schedule my appointments, after I send them an email with a calendar invite. Hopefully, and I ask them to accept it. They don't always do it, but I ask them to accept it. And then I send them that PDF in the email. And I just, if they look at it, they look at it. If they don't, they don't. Not a big deal. But I already have the PDF completed. But it's a nice way for them to put a face to a voice.
Yep.
And
they
have it if they want. Absolutely.
Yep.
So then I send them, I send a reminder email that hits their email 20 minutes before our appointment. And I send them ahead of time, so they're ready to get sent as soon as that 20 minutes hits. And it's just a reminder, like, hey, we got an appointment coming up. Here you go. It's a very basic email. There's nothing special about it. It's just like, hey, you've got an appointment with Greg at this time about the mortgage protection. Here's the link for the Zoom. Or if it's for FaceTime, it's like, you're going to be called from this phone number. Be in a spot available to take the call, in a quiet area. If it's a husband and wife, which I've determined that beforehand, then I'll tell them to have you and your spouse be available. So
right. Don't run one-legged appointments.
No, don't. You're still not going to run one-legged appointments on Zoom or FaceTime when you're doing remote. So I'll let you kind of take the reins when it comes to your appointment setting, because you're pretty quick. You do it. You talked about respecting your time, going really quickly, and just verifying information. It's worked really well for you. So go ahead and go over your script.
Yeah. So I keep it real simple. Ring, ring.
Hello.
Hey, Steven.
This is him.
Hey, Steven. My name's Zach. I'm just getting back to you about this mortgage protection life insurance form you filled out and sent back to me recently. I'm just looking to set a virtual appointment with you today. Are you married?
I am.
Awesome. What time are you and your spouse typically available?
We're typically off. We get in the door by like 5:36.
About 5:30 or 6. All right. I can do a 7 p.m. tomorrow. Would you guys be able to make that one?
Yeah, that'd be fine.
Awesome. I can do FaceTime, Google Duo, or Zoom. Do you happen to have an iPhone?
I do.
You do? All right, let's do FaceTime. Keep it simple. Um, I have you down for 7 p.m. tomorrow. I'll give you guys a shout then and see if we can get this handled. Is that fair?
That's fair.
Beautiful. Talk to you then. I keep it that simple. I don't walk into it. I don't ask them a bunch of junk because it doesn't matter.
Yeah.
We can get almost anybody insurance. It's just getting it set, respecting their time.
I think the only thing that you probably missed out on is getting my email, so you can send the email.
Yeah.
That's probably the only thing is verifying, because the leads don't have their email on it.
Right.
So,
Right.
so
Okay.
but yeah, that's super short. How long does your phone call take? Less than 60 seconds?
Right. It's on and off the phone, and they respect it because a lot of times you start asking them questions. They're like, "Oh, well, I'm at work. I don't have time for this right now." It's
Yeah.
respect their time. They respect your time.
Yeah.
Simple as that.
Yeah. And what's your show ratio typically?
60, 65%, somewhere in there.
Okay. Perfect. And then now I've went over my script with you and how I do things, and I assume that you do yours pretty similar.
Yeah, I'm still trying to work on the Greg Birch method completely. I've worked most of it in there, but you know, you want to role play through yours here?
Yeah. So I'll role play through my appointment, and then you can interject through. We'll split up into sections, and you can interject and tell the audience what you do differently or how you kind of run it. So let's say that Matt has called you and you answered, and it's going to be just you. So, hey, what's going on, Zach?
Oh, not much. Just another day.
Yeah, perfect, man. Hey, so thanks for taking my call. All right, and I'm gonna keep this real quick and easy for you, man. So just to introduce myself again, my name is Greg, and I'm the advisor that's been assigned to you from Chase Bank for your mortgage for $130,000. And so my job is real simple today. All I'm going to do is have a quick conversation with you, Zach, and I'm going to dig in. I'm going to learn everything about you and ask a bunch of questions. But what I'm doing is I'm trying to determine what it is that you're looking for. But most importantly, I'm going to see what you can be approved for. Okay. I'm going to take all those factors, I'm going to put them together, and I'll come up with some options. And hopefully I'm going to come up with an option that makes sense to you. And if so, fantastic. You'll be stuck with me. I'll be your advisor moving forward, and we'll get you approved something today. Is that fair?
Yep.
Boom. That's it. That's my intro.
And everybody says that's fair every single time.
Everybody says that's fair every single time.
Yep.
That is it. I keep my intro that simple. I try to establish credibility by combining myself. I tell them I'm an advisor based on the mortgage. I use their mortgage lender and the mortgage amount,
which is on the mailers.
Which is on the mailer. Okay. Now, sometimes the mailers will not come with the mortgage lender because it'll be confidential. Every once in a while, very blue moon. If it does, it does every once in a while. Sometimes.
I was gonna say, I haven't seen it, so
it's very rare, but it does happen.
Okay.
And if that happens, then I just say the mortgage for 130,000. I just
right.
So, how was your intro?
I do the exact same intro. That's exactly how I do.
Yeah, and everybody says, "Yep, that's fair. That's fair." Okay, perfect. So now I go into the questions. Okay, so this is phase 1's the introduction. Okay, phase 2 is just going over questions, and I'm deving out their situation. Deving means developing. That's an old military term I use. I dev out their situation in order to determine, one, I want to showcase that I understand everything about their mortgage and make sure that's something that can fit for them. 2, I want to make sure that they understand that they don't have anything in place like this. And 3, I want to make sure what they can be approved for. So the first question I always ask is, I'll say, Zach, when it comes to protecting that mortgage, what's your biggest concern? What are you worried about?
Well, I just want to make sure that when I pass away, nobody has to worry about this house. It's already taken care of.
Okay, perfect. And as he's talking to me, I'm literally looking down, and I have a pad of paper. I always have a pad of paper with me, and I'm writing notes. And it says, and I'm literally for him, I'm writing down cover mortgage. No one has to pay out of pocket. And I'm shaking my head. I say, okay. And I say, perfect. That makes a lot of sense, Zach. Thank you. Now, Zach, let's say that you passed away tomorrow, God forbid. What do you have in place today that would pay to your family or whoever's going to take the house? And that could be anything. That could be cash on hand. That could be large savings, stocks, bonds, retirement account, cash in the mattress, personal life insurance policies, anything like that.
Well, I got a small burial policy for about 10,000 and a couple $1,000 in savings.
And a couple of thousand in savings. Perfect. So you got that burial policy in place. That's probably the smartest thing you ever did. That's smart. You got it at your age. And Zach, who will be taking over the house the day you pass away?
My son,
Your son. What's his name?
Josh.
Josh. Perfect. Does he still live with you?
Yes.
Okay. Just in case you had a kid when you were like 15. I don't know.
Yeah, it happens sometimes.
It does. So if you, same scenario, Zach, if you passed away tomorrow, how much income is Josh going to be losing?
Oh, $60,000.
$60K a year. Perfect. Now, I like to pose that question as to how much the beneficiary is going to be losing. It's the same question as like, how much do you make? But it puts it in a perspective of loss and them passing away. So it kind of flips the question around a little bit, and they're more comfortable telling me this information, but it also puts them in the right mindset going forward.
Right.
So 6K a year. And if you were to become disabled and you couldn't work, Zach, how long could you maintain your mortgage payments and everything else before you said, hey, I need some assistance?
Oh, about 3 months.
3 months. Now I asked the question just like that because I want to determine what they have in savings. And I want to show that they don't have any kind of disability benefits or anything like that. That's what I'm trying to determine. Because this is where they're going to say, oh, I got work disability, I get this and that. I say, perfect. Now, Zach, you're pretty young, and I'm sure you're pretty healthy, but in the past 7 years, have you been prescribed anything for any medications for any conditions? What conditions were those, if so?
Nope, healthy as a horse.
Healthy as a horse. All right. No medications, even if you didn't put it in your mouth. No medications prescribed.
No, just the occasional antibiotic here and there, but
yeah,
nothing.
not too worried about those. Healthy as a horse. Perfect. Okay. And now that I've determined that he's super healthy, okay, at this point, I'm formulating a plan of where I want to go. Okay. Zach is, we'll say 38. He's got $130,000 mortgage, just to recap. And now I'm going to go over the mortgage information. So I'm going to say, hey, Zach, so I get that mortgage as 130,000, correct?
Yes.
Okay, perfect. And how many years did you do that loan for?
20.
20. Fantastic. And what's that approximate monthly mortgage payment on that? Taxes, insurance, everything included?
$1,200.
1,200. Okay. And was that a new home purchase or a refinance?
That was a purchase.
Purchase. Fantastic. Do you love it?
Yes, I love it.
Fantastic. Congratulations.
Thank you. Thank you.
You're welcome. Okay. So now I've got all the information I need. I've asked enough of the questions. And as you can see, this is a pretty quick. I respect the client's time. I get enough information to where I can go ahead and pitch them something. And I've been asking questions. So now what I'm going to do is I'm going to basically repeat everything to them. I'm using empathy to build rapport and show them that I care. I understand their situation. And I'm basically making deposits into them. Okay. Making these deposits into them so that when it comes time for me to tell them what we're going to do, they go with it. Okay. Now he's got a 20-year mortgage. He's 38 years old. His mortgage is 130,000. Okay. Now I can do a cash back option. Now he told me he was most worried about death.
Right.
Okay. So I'm going to highlight if he passes away. Now, I'm also talking about living benefits, but I'm going to highlight if he passes away. That's the focus. But he's only got a 20-year mortgage. So if I were to do a cashback option and it makes sense, I'd have to do like a 15-year, which would be very expensive. So that's not going to make a lot of sense for him. Okay. Now I can do an IUL so that at the end of the 20 years, he's got enough cash value in there. He can take it out or he can leave it in. And that's probably the route that I'm going to go with. Okay. Is an IUL. Or he only makes $60K a year. He's a single dad. Okay. I'm also trying to take into account his finances. So, with that, if I'm going to do just a basic, no cashback option term for 20 years, what I'm going to do is I'm going to do something that maybe gives him a little bit extra, because if he passed away within the next 20 years, he probably wants to leave a little bit extra money to Josh. So I can maybe bump that up to 200, or I can bump it to like 260. I can double the amount of his mortgage so that if anything did happen, not only is Josh going to get money to pay off the mortgage, but he's also going to get money maybe to pay for college, or just have something to remember that he can remember his dad by. And so these are the thoughts that are going through my head right now. Okay. So option 1 is going to be an IUL. Option 2 is going to be a term with living benefits that's going to that I'm going to increase the amount of coverage to leave extra behind for Josh. Because honestly, 10,000 is just going to pay for his burial. Probably not, honestly.
Yeah,
to be real, and this is going to leave extra money behind. So these are the thoughts and the process that are going on while I'm asking these questions, and I'm just literally like assessing everything as he's telling it to me. So, hey Zach, thank you so much for sharing all that information with me. So, what I'd like to do is just kind of review all of the information he's gave me, make sure that I understand it correctly, and if I'm missing anything, just go ahead and correct me. All right. So, it sounds to me that the reason that you filled out the mail is because you just had a new home purchase for $130,000, and you have a 20-year loan. And your biggest concern is that if you passed away prematurely, you want to make sure that your son Josh would be able to stay in the house and keep the house and pay it off. Now, you don't really have anything in place that would pay off the mortgage. You do have a burial policy for $10,000, but the way that the burial rates are going up, like, you might not be able to even pay for a full burial with that $10,000. But it's still good that you did it. It's great that you locked that in now. You make $60K a year, you're super healthy, so you're in a great spot. But you don't have anything in terms of term disability benefits if you were to get sick or disabled or anything like that.
Right.
Is that all about correct?
Absolutely.
Okay, perfect. So based on that, Zach, I do believe that this program is a perfect fit for you. Okay, so let me go ahead and tell you a little bit about what it does and what it is. So what mortgage protection is it's just like life insurance, okay? And it's a little bit different also, okay? It's like life insurance in that if you passed away, just like what you're looking for, it would pay money to your son the day you pass away. And that's all life insurance is. It's benefits paid out upon death.
Right.
Where this is different than life insurance is it pays you while you're still alive if certain conditions take place, okay? So those conditions that come with this are called a critical, a chronic, and a terminal illness. Now, a critical illness is anything like cancer, stroke, heart attack, anything major, okay? You get diagnosed with it, you would get proceeds from the policy that would help to pay off the mortgage and would help you in that time of need, okay?
Mhm.
Chronic is like a chronic disability. That means you need assistance doing 2 of your 6 daily living functions. A good example of this would be, let's say that you were going to work and you got into a car wreck and you didn't die, but your legs were crushed. This would be a chronic condition if you could no longer use your legs. Does that make sense?
Absolutely.
Terminal illness is pretty basic. Hey, you become terminally ill with 12 months left to live. This is going to pay out the mortgage. Okay. So what this is it's a full protection plan meant to pay you the day the worst happens. It comes with the life insurance, the critical, the disability, terminal, all rolled into one policy. Okay.
Mhm.
So now the companies do have to approve you. The good thing is that you're healthy, so you're probably going to be approved. But the companies still have to do a risk assessment, and they do a risk assessment based on a lot of different things. They do a risk assessment based off of prescription history, medical history. They do a risk assessment based off of any previous felonies. Also, your driving record. If you've had 10 speeding tickets in the last 2 years, you're probably at risk of getting in a car accident, and it makes you hard to be insurable. Does that make sense?
Yes.
So what we're going to do is we're going to do a quick check. Okay. We're going to go over some questions. We're going to do a quick check and see if they can pre-approve you. And if it makes sense, they'll show some options. And then we'll go over those options with you. Okay.
Okay.
Boom. That's it.
Right. Lead them right into it.
So I'm jumping right into an application. I'm not going over a lot of different options. I'm not like, I commit to an option and I move forward. Okay. For him, I'm going to commit to a UL. All right. And I'm going to basically, when I get to that point, where he's gone through all the medical questions, he's got me all his information, and based off the answers to the questions, when I get to the point of showing how much I want to cover him for and what it would cost, I'm going to say, oh, and by the way, this company is also going to pre-approve you to make sure you get some money back. So this is going to build cash value for you, so that, hey, the likelihood scenario is going to be that you're going to outlive this next 20 years. So at the end of the 20 years, whenever you're done with the mortgage, you actually are going to have a pot of money sitting there. So it's not going to waste. So you can actually pull it out of that cash value.
Right.
And they're going to be like, oh man, it's awesome. But I wait until then. Okay. And I jump right into an application and I start going to town. Okay. Whether it's, doesn't matter what carrier, or even if it's a CBO or return of premium, those are technically universal life policies. I'm automatically picking that carrier and I'm jumping right into an application. Okay. I see the sales process on remote sales process, like you're taking somebody step by step through it. Instead of telling them all up front what it is, I walk them through slowly.
Right.
And everything makes sense to them and they're willing to take the next step. So now that he knows, I'm going to be checking his records to make sure that his driving record's clean, that he doesn't have any felonies, that he's got no prescriptions. When it comes time for me to ask him for a social, it makes sense. So I don't get pushback when I'm like, hey, what's your social? Okay.
I've never had pushback with social.
Never get pushback. I don't get pushback either. They just
By
give
the
it to
time
me.
you get there, you have the rapport.
I've built rapport. So once I've built that rapport and it's happened, now I'm going through other medical questions. This is key. Okay. Don't race through the medical questions. Read them slowly and verbatim, word for word. Those medical questions build such rapport because nobody can make that up.
Exactly.
Some of those conditions, like they're going to be like, oh man, I don't even know what that is. Like they're like, what is that? I'm going to be like, I don't know. I'm just told I just got to read the question. So, and if you don't know it, that means you don't have it. So, but that builds rapport. Now, once you've gotten through all those medical questions, then I can get to the point where I'm going to show them options, and I'm going to pop in there the amount, and I'm going to say, hey, congratulations. You've been pre-approved for this amount of coverage. You've been pre-approved for the 130,000.
Yep.
And we went through X carrier. And the good thing about this carrier is that it's going to build cash value for you. And what that means is that at the end of the 20 years, if nothing happens to you, your money's not going to waste. There's going to be a pot of money sitting there that you can pull. Now you can leave it there and you can let it kind of ride out. And this can be your insurance past your time that you're in the mortgage. Or you can say, hey man, I'm going to take this money and you can go buy yourself a car or whatever, man. You can use that money however you see fit. Right. But it makes a lot of sense. All of my clients in your age range do this because the likely scenario is that you're going to outlive it, right?
Right.
Perfect. So for you, if you were to do the full mortgage, then it would be X amount. And I would tell them the X amount. If you were to do more than a mortgage, they're allowing you to do up to, and I'll say 250, double the mortgage. If you do double the mortgage and do 250, it would be X amount. Now, these kind of policies, when they get approved, they start day one. So if something happens to you next day, they're covering it. And with that in mind, if something happened to you, if you're approved and something happened to you the next week, would you want Josh to get a check for 130,000, or would you want Josh to get a check for 250,000?
Oh, of course, I want to leave them more.
Leave more, 250, perfect.
Yeah.
That's exactly what I would have picked. So now the reason why I do it like this is because literally the next thing I'm going to do is I'm going to get Josh's information for beneficiary, and then I'm going to get pay information. And I'm just now talking about prices, and he's picking a price, but he's picking it based off of logic and emotion. And people buy off of emotion, but people solidify that sale with logic, because the logic is the price. So I'm asking the question of, here's the amount, here's the cost. If you're approved, do you want Josh to get this check or this check? And it puts back into his mind what the policy does. It's like selling the sizzle. You're not selling the steak, you're selling the sizzle. Right. And so they're like, oh yeah, I want Josh to get, he like, just like you said, I want Josh to get more. Right. And how often does that happen?
All the time.
Happens all the time. And you upsell them. And then they're like, because it makes sense to them. And that means they've already calculated in their head the budget, and they know they can afford it. So now that they're thinking about budget, they're calculating the budget, then I'm just jumping right into the pay. And I say, okay, hey, what's the name of the bank that you use, Zach?
North Star.
North Star, perfect. And did you open it in the state of Pennsylvania?
No, that was Texas.
You open it in Texas, perfect. Okay, so at this point, I'm pulling up Texas. I'm pulling up Google, okay? And I'm going to share my screen when I do this. So I pull up Google, and I literally type in North Star, Texas routing. North Star Bank of Texas routing numbers. Routing numbers right there. So I say, perfect. Hey, and I'll say, and I don't now. I'm sharing the screen for training. I do not share screen with the client. Okay. I never share the screen with the client.
Right.
But I say, hey, perfect. Hey, and whatever carrier I'm using, X carrier, I'll say, hey, perfect. X carrier, they actually partner with North Star Bank of Texas. And I have the routing number as 111-904-817. Can you verify that for me?
Yep, that's it.
Perfect. Now, that means that he knows his routing number by heart. So more than likely, he knows his account number by heart. So then I say, hey, what's the account numbers attached to it?
1, 2, 3, 4, 5, 6.
They start reading it. The other option is that they'll say, hold on one second. Let me go grab my checkbook.
Right.
And then they'll go grab it, and they read it, and they're like 111-904-817. Like, oh yeah, that's it. And I'll say, hey, perfect. What's the account numbers attached to it? The number is right beside it. And they read it right off. This works so well when it comes, it is like, this is a golden, this is a friggin' nugget. Okay. Start doing this when you're on your remote sales in order to get the bank account. It lends credibility to you as an advisor, and it lends credibility to the carrier. When you can say, hey, I got this information, they're like, oh, they must already know. Like, he knows my bank. People don't realize, I've not sat with one client, the literal over 1,000 clients I've sat with in the past year and a half. Now, I've not sat with one that said, you only know my routing number because it's public knowledge. Nobody.
Nope,
never happens. You know, what almost always happens is, how do you know that? Do you know my account number too? And I'm like, I'm about to.
Exactly.
You know,
exactly.
And I just tell them, I'm like, hey, I'm a financial advisor. I work with a lot of banks. Sometimes I know account numbers off the top of my head, and I'll just be like, oh yeah. The account number or the routing number for that is 111-000-614, right, for Chase in Texas. And they're like, yeah, how'd you know that? I'm like, I work with a lot of banks.
Yep.
And it just lends credibility.
You know, the
go ahead.
majority of my clients are in Maine, and I'm in Pennsylvania, and they all seem to use the same credit union, and the routing number is like 6 digits.
Yeah. So you just memorize it, and you call it out. I have a lot of clients in Oklahoma, and a lot of people use TTCU, or Tinker Federal, TFCU, Tinker Federal Credit Union. A lot of people use that in Oklahoma. And so I've memorized Tinker, and I've memorized Arvest, because that's another bank that's used in Oklahoma. So when you start to memorize those things, it just lends credibility to you. And you can even, you can even make a little cheat sheet that you have on your desk and start writing out the account numbers or the routing numbers. Because if the faster you pull that up and faster you say it, it's powerful in terms of building credibility. So once that's done, then I'll walk through the application. And when I walk through the application, I actually walk through piece by piece. I talk them through the application. Especially a lot of different companies will send the application to both parties, or you can see the application, and I talk them through each piece so that they understand it. Because I want them to feel comfortable with what they're signing, and I want them to understand the coverage they're getting. And then at that point, I tell them, like, hey, this is going to draft as soon as it's approved within 24 to 48 hours. Once it's drafted, we can go ahead and change the date that you want that payment to come out. Do you already know? If you don't change it, it'll come out around this time each month. Is this time fine, or would you like to change the date? And then they tell me. If they tell me, then I make a note of it. And as soon as it's approved and the first policy is drafted, I'll call up the carrier and I'll change the date for them. So some carriers will let you do that. Some carriers won't. If they don't, then I'll schedule with my EA Amber. Amber will actually call them, get them on the phone with the carrier, and do it on the phone with both of them on three-way. So now that literally, do you see how easy and seamless that process is? It's that simple. Like, don't confuse this. Okay. Everything that I do in terms of mortgage protection, I do specifically and for a reason, because I've tried a lot of different ways. I've tried going into greater detail, and I find that the more detail I go into in terms of living benefits or anything like that, it just confuses them. And I find that when I give them multiple different cares or if I pick for them, if they're professional, if I'm the doctor, okay, and I'm like, hey, do you want to do a cashback option? Do you want to do a regular term? Do you want to do term of living benefits? Do you want to do a UL? What do you want to do? Like, they're like, I don't know. Like,
analysis paralysis.
Yeah. Then you gave them to my options, and then they don't know what to do.
Right.
And so I see myself as the doctor. When the doctor says, hey, Zach, you got your blood pressure is kind of high. Do they say, hey, I can give you amlodipine or lisinopril or metoprolol? Well, which one do you want? No.
Right.
they say, hey, I'm putting you on a low dose of lisinopril, and they just do it. Yep. And so I operate in that same means, and it takes away any possible like confusion on their part. It just makes it to where it's very simple. Like, this is the option for them. This was tailored to them.
Right. And you have to listen in the beginning too, when it's, why they filled out that form. If you're talking to a married couple, they'll tell you who is more important to get covered. And that's
exactly. That's why I asked that question, because sometimes you'll sit with a husband and wife and they'll say, hey, what's your biggest concern when it comes to protecting the mortgage? What's your guys' biggest concern? What are you guys worried about?
Right.
And if sometimes the husband will be like, I'm just worried if something happens to me that she's taken care of. And then she'll be like, yeah, he makes all the money, blah, blah, blah. And they'll start talking. And then it's like, okay, perfect. Hey, John, I'm focusing with you. Hey, Becky, I love you. You're still important, but we're going to focus on John today, because John's the one that's going to get coverage. And they're like, okay, perfect. And then because I'm suiting the appointment to what their needs are and what they want. So in terms of questions, is there any other questions that you ask?
No, I mean, the power is in the questions. It's, what are your biggest concerns? And then how long could you afford those payments if, God forbid, you had a heart attack or stroke? Mm-hmm. And you're trying to find out if the living benefits are important to them. Yeah. If they have enough money set aside that the living benefits aren't important, then you're just going to go straight life insurance. Yep. It's all about the questions.
Yeah. Now, the hardest part of this, and why I don't pick a carrier, there's two factors to consider. A, if Zach's lying to me and he had something happen to him and he doesn't get approved right away, the reason why I'm not telling him a carrier yet is because I will very quickly flex. If, like, let's say I'm doing a policy like a John Hancock or something like that, and it goes through and John Hancock takes it back, then I'm like, hey, no worries. we're going to go ahead and flex to another product. Okay. So, and I do it on the fly really quickly. Now, the hardest part is when you're sitting with somebody and they start to give you medications, and and also you have to factor age, health, and then and budget. And then you're like, okay, well, am I going to do a term? Am I going to do a whole life? Like, which one can be approved? Which one's going to be cheaper? Which one actually fits their budget? There's a lot of factors that go into it. And
Yep.
that is just going to come with time.
Yes, it does. You get better at it.
You're going to get better at it, but it takes for you to actually go through the widgets and practice it over and over again by sitting with people. But as a rule of thumb, anyone that's 70 or over, I'm not doing a term. I don't care if they want a term. I'm not doing a term. I'm gonna do a critical period coverage through a final expense policy. That will be the best price for them.
You want to explain critical period?
Yeah, I can explain critical period. So let's say that you're 70. Okay. So what I do is I'll say when I talk to them, to back up at the point at which, I was telling him about what mortgage section was and how his life insurance and critical and chronic, all that. Instead of going through that, now I'm sitting there saying, hey, Zach, you being 71, there's a lot of different options that you can do. Now you can do a mortgage protection policy, but traditionally those start to get really expensive, and they can only cover you for about 10 to 15 years, and your mortgage is 20 years or 30 years or whatever it is. So it doesn't make a lot of sense, because if you outlive that plan, that money's gone, right? So what we're going to do instead is we're going to do what's called a critical period coverage. Okay. And the good thing about this is that they're a lot more cost efficient. Okay. And they were created for people in your age range when they hit 70 or older. So it makes the most sense for you. They did this on purpose. And what it does is it buys you time. It buys your loved one time. Okay. And that time is important, because the day you pass away, there's going to be a lot that's hitting them. And so we're going to buy them either 12 months, 18 or 24 months of time, so that they don't have to make a decision on what they're going to do with the home.
Right.
Does that make sense?
Yep.
So basically it's going to pay off that mortgage payments for them. They can restructure their finances. They can make sure that everything's good. And then if they decide, hey, I'm going to go ahead and sell the home, they have time to sell the home, get it ready, get all the equity out of it. Or if they want to refinance the home, if they've paid off enough, they want to refinance it to a very cheap price, they can do that. So we're going to buy them time. Now, the best thing about this program is it actually, every single payment you put in is actually being saved for you. It's going to an account. And you can actually pull from that account. Once you've had the account long enough, you can borrow from the account. You can take money from the account. Your money's not going to waste. This policy will be with you for the rest of your life, which you got a 30-year coverage. If you make it to 100, the money's yours anyways.
Right.
So what we're going to do is we're going to see if we can get you approved with it. Okay. And we're going to find a carrier that's going to be best suited. Make sense?
Absolutely.
And I'm going into the application same way.
Yep.
And then I go through the application. I show them the options. I show them options by time. So I automatically take, he said $1,200 was his monthly payment. So I take that 1,200, I'm going to divide it by 12. So that's going to go ahead and be $1,440. I'm going to up it to $14,500, and I'm going to show him a 1 year and a 2 year. So I'm going to show him a $14,500, and I'm going to show him a $29,000. Okay. And I'm going to say, hey, based on this, based on this, your answers, you're pre-approved on a preferred rate. If you were to get approved, you can do a 1 year or a 2 year. And that would cover 1 year mortgage payments for your wife or 2 years mortgage payments for your wife. The 1 year mortgage payments for your wife would only be, $150 a month. The 2 years mortgage payments for your wife would be $295. Now this approves right away. So if you died tomorrow, they would pay out. So let's say that happened. You got approved, you passed away tomorrow. Would you want Becky to get 1 year worth of mortgage payments paid for her, or 2 years worth of mortgage payments paid to her?
2 years, of course.
Perfect. I don't talk about the amount. I sell it by time. This is the same thing. You're selling the sizzle, not the steak.
Yep.
That is critical period coverage. You pitch it like that, you'll have a lot more success in getting people into the program. And it makes a lot of sense. So every once in a while, people be like, I really want to get a term. I want to get a term. And I'm like, all right, so a term, let's say it's 120,000, 130,000. Let's do half of that. 65,000. 65,000 is going to be, and I'll tell them, 65,000 is going to be $400 a month. And they're like, what?
Yeah.
And
then they understand why you did it.
And it's like, yeah, that's why I'm trying to help you. I'm trying to save you money. And then they're like, oh yeah, let's just go and do the critical period coverage. That makes sense.
Yeah.
So that's in essence, in a quick down and dirty presentation, that is how you do mortgage protection over Zoom. It's easy. Keep it simple. Don't over speak things. Don't give too much information. It will confuse people, and confused people do nothing. You got to break it down as simple as possible and make sure that you're taking care of them. So
you have to be solid in your head. It took me a long time to realize that. Pick a plan, stick to it.
Yes. Yeah. Don't show them 5 different options. It doesn't work that way. They will get confused and they'll like, I got to think about it. I promise you, if you let them off that Zoom or FaceTime or even off the phone, they're not calling you back.
Yeah.
They're not. Okay. You got to be good at overcoming objections. I want to think about it. That's the number one objection you'll get. We're going to think about it. We just want to think about it.
How have you been overcoming that one?
Oh, that's easy. That's perfect. That's exactly what I want you to do. I want you to think about it. Okay. So this is what we're going to do. Okay. We're going to submit an application. We're going to see if we can get you approved. And the process of them approving you is going to give you that time to think about it. If you are approved, they're going to send a policy to you in the mail, and you're going to get actual, paper in hand that you can read over, and you have 30 days to work over it with your wife. And that's also your time to think about it. Does that make sense?
Yeah.
So let's go ahead and get this policy sent up to see if we can even get you approved.
Yep.
That's simple.
Yep. I get over it by the one I've been using lately with a lot of success is, let's go ahead and see if we can get you approved for a smaller amount. And then we have 30 days to make adjustments if we need to.
Yeah, that's also you can do.
I follow up with them in 25 days and say, hey, where are you sitting? Something's better than nothing.
And so that's exactly, I do the same one. That shows care on your part, that you're not trying to upsell them.
Right.
Because it's like, hey, let's do this. Let's go ahead and put you in, because if you're approved with the lower amount, you're approved for the higher amount. We'll just see if we can get you approved for the lowest amount. And then if you're approved, I'll reach back out. And if you want to increase to the 2-year, we'll put you on the 2-year. Does that make sense? But it gives you time still to think about it in between.
Yep.
And they're like, oh yeah, it's fine. That's a great one to use.
Yep. It works all the time for me.
Yeah.
So no, it's simple.
It's that simple, right? You don't need any flash. You don't need any PowerPoint slideshows that you show. You share a screen. You don't need any of that.
No 20-minute script. Nothing like that.
How long are your appointments typically?
Including application for two individuals, I can get through it in 40 minutes max with two applications.
Yeah.
Less than that with one application.
Yeah, one application I'm usually in and out by 30 minutes.
Yeah, and if I'm doing 2, I have 2 monitors and I do them side by side.
That's the same thing, and I do the same thing. I'll tell them like, hey, I'm gonna pull up 2 windows. I'm gonna ask the questions one time because we're gonna do the same policy. I'm gonna ask the questions one time. You guys both answer, but let me go and pull this up, and I do both applications at the same time.
Yep.
Absolutely. It makes life a lot easier.
Yep.
So
it does. So it's game changing. I can run 8 appointments a day and not leave home, not worry about getting no showed.
Exactly. Now, any other notes that you want to leave for everybody in terms of when it comes to, mortgage protection over remote?
I think you and I both said our go-to is FaceTime or Google Duo prior to Zoom. Zoom is the last one, but other than that, it's powers in the questions, just like you said. Walk them through it. So, and as you get better, you start to be able to formulate plans in your head quicker and be solid in your plan.
Yes, absolutely. The last note that I would say is some people are not going to be comfortable getting on Zoom, and they won't have an email, and they don't even know what the hell Google Duo is. And so those big, just call me. Do not assume that you can't sell them mortgage protection over the phone. I have done that plenty of times. Okay. There's been times where I'd be like, man, I don't want to do a phone call. And I assume that it's just not going to be a good sale. I've sold very big deals, very sticky deals over the phone.
Yep.
Okay.
So, also, Google Duo, if a client doesn't know if they have it, you can start to type in their phone number. Google Duo will tell you if they have it.
Yep.
And then you just tell them, answer it like a phone call.
Yeah.
So same thing with FaceTime.
So
there's all kinds of little tricks.
Any last parting shots?
No, sir.
Awesome.
Nutshell.
Awesome. Well, everyone, I hope that this was very helpful for you. And I hope that this groundbreaking training was actually good and helped to teach you a good method for how we here at Evangel Brokers do mortgage protection remotely. If you like what you saw, then the fee is share the content, share it out with people, let other people know. We want other people to be successful. We don't care if you're with Evangel Brokers or not. Everyone should be successful in their business. Okay. If you're watching this on YouTube, then subscribe to the channel, like the video, turn on the notifications, because we're coming to you each and every weekday with new training. And